We are quite possibly witnessing the biggest and most profound legal case happening within the entire crypto space. Leave aside the Bitcoin ETF, we're going to talk about Coinbase's response to the SEC, asking for a dismissal of the entire case. And based on some initial legal analysis, again, I'm not a lawyer, but I've seen some breakdowns here that this isn't a wild accusation. This isn't a snowball's chance in hell here. They actually make some really important points. So let's jump in to analyze the most important legal proceeding going on that could spell one of the biggest changes in public policy towards cryptocurrency in the entire history of the industry. This is important. As you can see here, this is a 177-page document, and we will be going through word by word, comma by comma, parentheses by parentheses. Well, actually, this time we're going to be going through it a little more than normal. We're not just going to go to Twitter threads, because I think it's actually really important just to read this preliminary statement, or at least get the gist of it. So we're going to dig in just a little bit. I'm going to zoom it in just a little bit here. And we're going to get ourselves a sense of what's being said here. Okay, so first of all, this is a huge document, but this preliminary statement is important. They talk about how, we're the largest exchange. They're saying, hey, look, in 2021, we went public with the SEC's blessing. 2 years later on, the SEC decides to accuse Coinbase of having failed in 2019 to do a registration. And so this is what's weird, is in 2019, they're claiming that there was a failure, but they approved the public offering of Coinbase as a stock on the NASDAQ in 2021. So again, there's a weird gap here. The reason why I'm going through this is that legal documents aren't actually that hard to read. They're just so much that no one would normally jump in. But it's really important that we all together get a firm understanding of how the laws are shaping up here, because this is going to be one of the biggest financial plays in the world. Understanding how the laws might be circling around the crypto industry for the positive and the negative is super, super important, because if you can predict legal victories for the crypto industry, that could be something that has a huge financial implication. If you're able to bet on the right time, the right assets, the right side of those victories, meaning a Bitcoin ETF and Bitcoin, Coinbase stock and Coinbase, these are huge things to be tracking. Check this out. I know you can do this. We're doing it together. If you guys are excited, smash like button for us becoming legal scholars. It's a huge jump in our careers. All right, number 4, the SEC's about face is not a product of material changes in Coinbase's business. None are alleged, nor is it due to new information. Nowhere in its complaint does the SEC suggest that Coinbase hid anything in the many of years of cooperative discussion, nor is it a reversal of a product of legislative change. Congress has considered and continues to actively consider multiple regulatory proposals governing digital assets, but no statute has been enacted since April 2021 that gives the SEC any powers to regulate digital asset exchanges, much less retroactively. The only change is in the SEC's position regarding its own powers. This is a huge crux of the argument here, is that nothing's changed except the SEC deciding that they now have the power to just go after anything and anyone that they deem is under their remit, which is a huge departure from prior administrations. In fact, listen to this clip before we get into the rest of this legal argument, which is from Jay Clayton, the former SEC commissioner, the previous person to hold the same job as Gary Gensler.
Let's take this to a very high level on the regulatory side. What you're hearing from the leaders of the regulatory organizations is, if we're not losing cases, if we're not being pushed back on by the courts, we're not doing enough. Think about that for a second. That is a fundamental shift in how we as Americans view the role of the government. I don't want to be in a place where I know the government is going to bring cases they think they're going to lose. Imagine you're the person who is the subject of that case. Now, we're talking about corporations.
Yeah, to see if they can, and if they're not stopped, they're going to, yeah.
Right, but this is an ethos now, which is, unless we're losing, we're not bringing enough cases. That may be fine for private litigants against each other and think about it, but when you have the power of the state, and you're supposed to only bring cases and only make rules that you think are going to pass judicial muster.
Well, there you have it, from the prior chairman of the SEC saying, look, this isn't the way the regulating bodies are supposed to work. You're not supposed to bring cases you think you might lose, and then effectively it's on everyone to prove their innocence. It should only be serious violations that are taken to court. Anyway, moving on, let's get back into this document. It's really important you understand this. That position is untenable as a matter of law, and they show here the flip-flop that in 2021, Gary Gensler himself testified before Congress that the SEC needs more powers powers to regulate the industry, that there is a regulatory gap. He said that only Congress could address this regulatory gap. Of course, now the assertion is that the SEC has always had the powers, that the laws are clear, and that everything falls neatly under a law from 1933. Again, you can see the flip-flopping here, and you can see how the new narrative is totally unsupported by a prior fact pattern, and that a company like Coinbase, which tried to do everything right, is now being put in the doghouse after trying to do everything by the book. This is not something that the courts are going to look favorably upon. And at this point, it doesn't take a rocket science degree to realize that Coinbase has some pretty good points here, but we're building up to the main point. The main point is this. I'm just going to jump ahead a little bit. They say, hey, look, the assets trading on Coinbase's secondary market platform are not within the SEC's authority because contrary to the SEC's assertion, they are not investment contracts and therefore not securities. Again, there's no contract involved in trading a crypto. It's just a thing. It's an asset. Remember, the SEC laws apply to contracts, not necessarily the actual assets or things. Really important to understand. Jumping ahead here to the main argument, which is, I think, the most important and will probably be looked at with the heaviest weight in all of this, because all of these questions of what might be a security, what might not be a security are up for rigorous debate. However, this is not up for debate. Listen, none of the assets that the SEC has now identified are in fact securities. And for that and other reasons, secondary transactions in those assets are also not securities. This is where they build into their main point. Even if the SEC's construction were colorable, meaning that they could back it up, the major questions doctrine, I want you to remember that. This is the main point of their argument, and it's something that we need to all understand because when you talk about it in plain English, it makes a lot of sense. The major questions doctrine would require its rejection in deference to Congress's prerogative to choose for itself how to regulate a significant portion of the American economy. That is because courts presume that Congress intends to make major policy decision itself, not leave those decisions to unelected agencies or bureaucrats like the SEC. And when an agency claims to discover in a long extant statute an unheralded power to regulate a significant portion of the American economy absent clear congressional authorization, the courts will not accept an agency's novel statutory construction, even if colorable or plausible. Okay. Woo, this is the key. 16 here, this paragraph is one of the most important ones. If there's this huge part of the American economy that's affected by this, in this case, $1 trillion asset class like crypto, a regulatory agency can't dig up some rule to impose its own will on it. In fact, the courts must defer to Congress to regulate this particular major question. We can all agree, at the very least, that crypto is a major question. Whether or not you think it's a security, a commodity, whether you think it's good, bad, left, right, upside down, whatever it is, it's a lot of money. It's a big part of the economy. And this is something that Congress is actively trying to pass rules to create a framework for regulation. And so the SEC coming in like a rabid dog and biting off everything it can see, while Congress is over here saying, hey, we're trying to do this over here. That shows, according to the major questions doctrine, that the courts must defer to Congress. The courts must look to Congress to pass these rules. And specifically, if a regulator is trying to do this before Congress, then the major questions doctrine prevents them from doing it. This is a huge and very important and very powerful legal point that I believe will be the crux of this case dismissal if it is dismissed. This is a very important point and may very well be the underlying legal precedent and legal logic used to push crypto policy forward, to allow for Congress to have the space and time to create a sensible framework for regulation. This is exactly what people like me would love to see, which is that elected officials who are responsive and responsible to their constituents, to us American voters, that they are the ones representing our beliefs as we attempt to create a new type of legislation for a new type of asset, a new financial and online world that we're all pioneering together. It needs a new set of frameworks, a new set of guidelines, and it needs a little bit of tender love and care. We can't take laws from the 1930s and apply them to a new layer of the internet in what is almost the 2030s. This is crazy. We all know that it's a blip in history, and it's very exciting to see this type of legal rhetoric. Let's go ahead and jump in and see a few more takes around this. As you can see here, MetaLawman is saying the preliminary statement in the answer is an excellent treatment of the key arguments for dismissal. A more level-headed take here from Nora says, look, Here's the summary. They're saying that the SEC does not have any business to interfere here, and she's saying this is all PR. Of course, it is good PR, there's no doubt about that, but it really does bring up a very important question, which is when there's a major question about the economy, this is something that should be decided by Congress. And when you have the House Financial Services Committee actively deciding this stuff, literally saying, we're putting forward bills right now to decide what is and what isn't a security, what is and what isn't a commodity, well, isn't it respectful to Congress to give them the chance to figure that out? At least take a crack at it? Now, VCs aren't good for much in crypto, but they do have a lot of lawyers. And to this extent, Van Spencer says, the extent to which crypto lawyers and crypto policy have shown up for the industry in this bear market is something to behold. I expect multiple meaningful court victories in the next 3 to 6 months that set the industry on a new trajectory. Let us not forget the estimated 80% chance of winning their lawsuit that Grayscale has in converting GBTC, Grayscale Bitcoin Trust, to a Bitcoin spot ETF. Taken as a whole, it's a very, very fascinating time to be in and around the crypto space. Yes, bullets are flying, accusations are flying, new laws are being written, and the landscape of the future of our financial world is being shaped in front of us. You absolutely love to see it. As always, if you enjoy these videos, you know what to do. Smash that like button, subscribe for more videos, and make sure to click on this video because it's even better than the episode you just watched. I'm EllioTrades, and I'll see you very soon on a new episode.